basic candlestick thing, but has anybody heard about the subprime lending issues in the financial market?
Interest rates. I read it.
It was basically the last time Ben Bernanke was in front of Congress. That's what he was talking about. And basically, the issue was that there's two things basically. One was the fact that we just were coming out of a housing boom, and then the second one was that the lowering, cost of those houses or lower valuations of all those houses, all the loans that everybody's taking out. A lot of people basically overextended themselves, and so defaults up on a lot of mortgages. But anyway, what was that? So you have, just call these middleman firms like small banks and stuff. Basically, what they were doing is at this rate up here, they were selling mortgages at like, I don't know, like we'll say 6%. And so basically funding housing, and this is all kind of subprime. So this is like for people who would actually, since it's subprime. For people who typically couldn't get a mortgage, they would have to, pay a little bit more a month, let's say 8% on their loan. And then what these companies would do is, and again, these are like subprime, so they're pretty risky. They would back out the other end. They were selling bonds to kind of cover their positions at, let's say, I don't know, like 5%. Actually, probably the bonds. So let's say 6%.
So is that where they would get the money from? Is from selling the bonds?
Well, yeah, because basically, so you sell bonds over here, and you say, okay, I'm gonna be paying you 6% every year, and so they get all the money initially. Yeah, so they get all the cash, and then they start, and it generally happens in reverse. Generally they do have some money first, and so then they loan out this money, and so basically they're making a 2% spread here.
Yeah.
And that's how they pretty much cover the cash. But anyway, with all these loans starting to default, a lot of people, because of the housing boom, thinking that these subprimes were actually a good investment opportunity, a lot of investment companies, especially Bear Stearns, started holding these bonds. And the problem with these bonds is they're practically junk bonds. So if the market value goes down on these bonds because so they start to get a little bit more risky, you have to mark your books as taking a loss immediately, like right now, as opposed to, despite the fact you might be guaranteed a 6%, or you're guaranteed to pay out the 6%, you got to mark down those values immediately. So if the values start to drop, like everybody's worried about, basically everybody's going to be posting these huge losses, which aren't necessarily real losses. It's not like they actually lost money, but it's just that the market valuation was low, so they still have to post it. That's still the accounting standard. So anyway, so this issue started becoming even bigger, I think, within just the past couple of weeks, because it's like if all of these, so suddenly imagine you have all these big companies, Morgan Stanley, Bear Stearns, JP Morgan, everybody's holding these things because they bought them during the housing boom. They thought it would be a good idea. Well, the problem is if one of those firms decides to kind of flinch and bite the dust and start shorting them, the value's going to go down, and everybody's going to experience those losses. So right now, everybody's kind of taking long positions in these things and keeping them up and waiting for somebody else to move, basically. So it's kind of it's a tense situation in the financial sector, which happens to be where we're at right now with our investment mix.
They're nice.
Yeah. so nice. So yeah. Anyway, so that was kind of the subprime lending woes. Blah, 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 blah. Just in case anybody heard about that, and that's why. But see, on the flip side, there's a lot of speculation that that none of these firms are going to do anything about it. They're all going to kind of keep the same long positions with these bonds. So all this speculation about the financial sector taking a hit really isn't going to happen, even though prices are starting to go down. So actually, this might be a good time to get in when everybody might have this opinion, because it is a sector that's underperforming the rest of the market. We're in somewhat of a market stock boom for sure, but the financial sector is now realizing that, like everybody else is, to the fullest extent because of this subprime issue.
Are they up or down on the year, this sector?
I think everybody's up at this point, but they're just, they just haven't been experiencing it
As great.
as greatly as everybody else has. can see right up the top, Chicago Mercantile Exchange. Chicago Mercantile Exchange just kind of, I think, joined forces with CBOT. Here, over here was, let's see, actually, let me see. Cash flow from operations. A lot of these are negative just because certain buyouts have just taken place, so they just maybe invested a lot of money. So they basically are short on cash and took a lot of funds out. That can be a bad thing and that can be a good thing. You can see that, well, okay, their positive cash flows means that they're, earning cash and they're not overextending themselves. They probably have low debts, which is a good sign. But at the same time, it's like, well, what are they doing with that money? Are they just keeping it? Are they giving back to the investors? Are they reinvesting it? Are they expanding? Because there's a lot of times when these are black and these aren't red, they could just be sitting on it. And which in that case, they are, I think you would call it overweight companies, and they're just not performing, maximizing their opportunities. But anyway, so that was cash flows, and you can kind of see current assets. Again, Chicago Mercantile Exchange is a really, is a huge company right now.
I feel that the overall market's highly overvalued at the moment. The
Yeah.
financial sector's gonna take the biggest hit, like, if a correction happens. And I really like the Chicago Mercantile Exchange, but like, right now might just be bad timing for that. And so I was looking at a lot of the banks, and I think we should have a domestic bank and then have a foreign bank.
Definitely out of the list.
In the investment sector overall, I mean, it's just asking to take a big, I think it's just bad timing right now.
Yeah.
Because I mean, you saw what the market's been doing. Like, I've been naysaying about impending doom over the market
Right.
with like a nasty bear coming,
Yeah.
and then with interest rates doing what they're doing, like
Yeah.
I see like the market going. I mean, I don't know. We just had such a crazy run, like crazy growth that there has to be a correction. I think we're well overdue for it. And I think buying into almost any companies in the investment sector would just be a bad move at this point in time.
We could just avoid the sector altogether.
That's what I was kind of thinking.
It is possible. I mean, we kind of hit it.
I think we should get the
Roger
CME later. But I really like Deutsche Bank. And I really like Wells Fargo.
I think so,
It's like
yeah.
it's like a utility. It's like a defensive stock to own
Yeah.
right now at the time,
And they
which
are
is
not
a real good move.
Right. They are money crediting services. They're not really investment opportunities.
Like Steve was saying earlier, Warren Buffett, like Berkshire Hathaway's main holdings are in Wells Fargo. They own more shares of Wells Fargo than any other company. You know? Plus, they just have solid financials, steady growth. I don't know.
No, you're making a good point. It goes back to you figure that money's always in smart hands, and you mentioned, I can't pronounce the name. You'll have to say it for me. Berkshire Hathaway.
Berkshire.
Yeah, thank you. But if that's what they're buying into, then it gives weight to what you're saying, that this is a decent investment, and we should take a strong look at it.
Fargo's
Are we looking at banking? Or are we looking at investment services?
I think
Or are
at
we
this
looking
point, we can focus on money center banks. Services, I think it
I guess.
would be a good idea to hold out. I can't.
I would agree.